or separate financial statements or consolidated financial statement. We are debating for years together. Right now, as per the notification and as per the amendments, and you are aware that the Companies Act 2013 was the first step moving towards IFRS, and accordingly that environment was already created earlier to move towards the IFRS. These will be applicable on separate financial statements as well as consolidated financial statements, and therefore challenges are more. Even the concept of a fair value, not on historical cost basis, but on fair value, the accounts will be, financial statements will be prepared. Present value or the discounting technique will be applied, and I'll give the few examples little later. And we have the problem of switching over. Main problem is training to the trainers, and that's why as a chairman of the India's IFRS Implementation Committee, really I have a challenge. There are a number of taxation issues are there. Taxation is in the sense, you are aware about the MAT, minimum alternate tax, which is applicable to the corporates. Book profit is going to change. Therefore, minimum alternate tax will change. Interest component is required to be segregated even from the sale value. Even the VAT excise question arises. I'll take a simple example so that you can understand it. In case if I sold the goods, normally I am selling the goods on 60 days credit basis. And in case if I sold the goods on 180 days credit basis, it is but natural my sale value will be greater in case of the 180 days credit basis. That sale value will be bifurcated in two parts. What is the sale value and what is the interest component? Now this direction, we have to also understand the development of interest of the investors. Investors should be aware about this change. They should be in a position to calculate what is the earning per share, how is the dividend per share, how to calculate it, what is the financial position, how to read the balance sheet, and therefore it is necessary that all the stakeholders are required to be, the training is required to be imparted to them, and we have to make awareness. My dear friends, current assets and non-current assets, current ratio is going to change, debt equity ratio will change, proprietary ratio will change. So it is also necessary for the bankers to understand the revised debt equity ratio, the current ratio, and therefore entire ratio analysis will change. Please keep in mind that right now, under the Payment of Bonus Act 1965, bonus is paid to the employees. The allocable profit and available profit is also going to change, and therefore bonus to employees will also change. Commission is based on profit. Profit is going to change. Somebody asked me a question whether the profit will increase or profit will decrease. Please keep in mind, over the long run, profit remains the same. It is only a question of particular accounting period, and therefore it's a transition phase. It is not forever. Total profit over a period of 10 years is going to remain the same. My dear friends, please understand this change. Commission to managerial personnel is going to change. Profit will be shifted from 1 year to another year, and therefore the India's IFRS Implementation Committee has number of challenges, and we have taken the initiatives to impart the training. I can give only one or two examples to understand it, how these IFRS are principle-based standards. Take the example of interest-free sales tax loan. State government, under the package scheme of incentives, give the enterprise or the pioneer enterprises some loan, interest-free loan based on the past sales tax paid or the VAT paid or the future VAT you are going to pay. Please keep in mind, under the existing accounting standard, one accountant will pass accounting entry, bank account debit to interest-free sales tax loan account, say 100 crore, and the another accountant, after a number of years, 14 years, 12 years, 10 years, will pass another entry, interest-free sales tax loan account debit to bank account. That's all. This is the existing standard. My dear friends, if you give a deep thought to this issue, is it correct? The answer is no. Why? Government has given you interest-free sales tax loan. You are not to pay any interest. Please keep in mind, therefore, government has given you interest subsidy. So under the IFRS, you are going to calculate the present value of that 100 crore which you are going to repay after 10 years or 12 years. Suppose that present value comes 70 crore. Then what it will pass? Bank account debit 100 crore. To interest-free sales tax loan account 70 crore and you have received an interest subsidy from the government to the extent of 30 crore. Please keep in mind, subsidy given by government, state government, is nowhere reflected in the financial statement because you need not pay interest. In case the state government would not have paid you that interest to sales tax loan, you would have borrowed the money and you would have paid the interest. So that 30 crore is interest subsidy. Now from time to time, you have to provide that interest to your in profit and loss account. Subsidy will not be credited to profit and loss account, but interest will be debited to profit and loss account. That is your ascertainment of to profit. So this type of changes are there. Like so far the preferential capital we treat as the equity. Now the preferential capital will be treated as debt, and there are a number of changes are there. These are the examples. I can talk for hours together. But right now, what is important is, my dear friends, it's a time to switch over, time to change to the IFRS regime, and therefore, at the end I can say, what ICAI will do. ICAI will give the training to the trainers. ICAI will give the guidance for implementation issues. ICAI will coordinate with NACAS and coordinate with Ministry of Corporate Affairs. ICAI will empower professionals, accountants, academicians, investors, and even other stakeholders. Awareness is required to be created. ICAI will create the environment creation in India, and ICAI will simplify the existing accounting standards in order to make it applicable in the longer run to the non-corporate companies too. Achalapati, I am really thankful to you for giving me an opportunity to be a keynote speaker in this international conference, and I congratulate you for taking this initiative, because I was talking with Pune University since last 2 months that have one program on IFRS, but you are the first winner. Congratulations to all of you, and I wish you all the best. Thank you.
Thank you, sir, for hinting that we need to relearn and relearn, and also for hinting about the progress of accountancy. We now have the address by the Chief Guest, Professor T. Papireddy, Chairman, Telangana State Council of Higher Education.
State Department of Commerce, Shankaraya Garu, Board of Study Chairman, Lakshmana Garu, Dean, Faculty of Commerce, Akbar Ali Garu, the Principal of Commerce College, Shekhar Garu, and the important dignitaries, Devnath Reddy Garu, Vice President, ICAI, New Delhi, Javre Garu, Chairman, Indian Accounting Standards Implementation Committee, ICAI, New Delhi, my fellow colleague, Professor Venkatachalam, Vice Chairman of this committee, the chair, and one more important dignitary on the dais, Amrit Chopra, the Chairman, National Advisory Committee on Accounting Standards. Of the dais, some of the important dignitaries like P.R. Ramesh, Chairman, Deloitte, Mr. L.V. Iyer, Corporate Advocate, the Prabhakar, former member, IASB, Director, KPMG, USA, Soral, General Secretary, Indian Accounting Association, and Shailaja, University College of Hyderabad, and the participants of the various universities, national and international, the students, media, and other friends. I'm happy to associate myself this prestigious 3-day international seminar on IFRS. When Chalapati Garu approached me to associate this conference, I happily agreed for this end. In 1991, the B.V. Narasimha Rao government was announced liberalization, privatization and globalization in India. The introduction of International Financial Reporting Standards, IFRS, is closely related to the entire issue of globalization because it has changed the closed economy to open economy. The implementation process of International Financial Reporting Standards gained wide interest in the field of financial accounting research community in India. The International Financial Reporting Standards represents an essential change, development in the field of accounting with the aim of making accounts more consistent. In India, the date of implementation has been postponed from April 2011 to April 2015. The Finance Minister, Sri Arun Jaitley, announced recently that the implementation of IFRS commences from April 2016. Just now, Jawahar Saab said, at least we have to follow 2016 onwards. India has no further escape route and the mindset has to change for IFRS. But the process of convergence with IFRS has been making a slow but steady progress till now. The IFRS are principle-based accounting standards rather than rule-based. It aims to ensure the financial statements understandable, reliable, relevant, and comparable. This seminar is a wonderful initiative on the part of Commerce Department to create awareness about IFRS among the practitioners and academia in the field of accounting. It is a great effort to bring the policy makers and international experts on a single platform. For this, we appreciate the Department of Commerce, Usman University. Implementation of IFRS will not only influence the corporate and policy makers, but it will also affect existing commerce curriculum in India. The teachers must update their existing knowledge and they have responsibility to prepare students in the direction to meet the future challenges. By taking this account, the Telangana State Council of Higher Education, Government of Telangana, formed a committee to develop new curriculum according to the changing accounting and reporting standards. New Committee Act 2015 changing in direct and indirect tax laws. The council has appointed Professor K. Shankaraya Garu as the coordinator for development of new curriculum. Now Professor Shankaraya said that the final report of curriculum is ready for submission. On this occasion, I take the opportunity to congratulate Professor Shankaraya and his team members for their efforts to finalization of beautiful designed new committee for commerce curriculum. Our curriculum will become a benchmark to the commerce faculty in other states of the country. Finally, I wish this 3-day international seminar will deliberate the issues that pertaining to the accounting in Indian companies, and it will throw some light on existing knowledge. my understanding of this IFRS is, at least we should have adopt this accounting system, we can reduce significantly the manipulation of the companies. The most of the stakeholders, they don't know. For instance, in the share market, the number of investors are there. What is the companies, the working, the results or the financial results, how it is representing their performance year by year. In order to more transparent, more scientific, more in a way to similar to the other countries, we need more and more this type of the systems to develop and reduce the information gap, or we should not allow the companies to manipulate and get away from their misdeeds. Therefore, I thank the organizers for a beautiful and relevant seminar, and I hope this seminar will give some more knowledge to this field. I finally congratulate the Commerce Department and all the participants. Thank you.
Thank you, sir, for sharing your valued thoughts with us.